Good morning, everybody. How you guys doing? Schlurm? Nice. Everyone ready for the exciting week ahead? Yeah, I'm still a little raspy. So, Saturday, it got way worse. I got super sick. And then I'm feeling like a little bit better today, which was weird because Friday, like towards the end of the day, I was feeling better. Nope. Someone get this man a lozenge. Yeah, every time I try to use cough drops with this shit, it makes it worse. This stream card has me triggered. Excellent. That's the 5th of November. Thank you, Tom Tom. I miss my voice too. I don't know any fishermen, Pookie. Honey, vinegar, and lemon. Ew. Why vinegar? Just for extra lemon? I hate the 1-2 punch the colds have these days. I'm kind of sick, feel okay. Bam. Twice as bad. Yeah, it's bullshit. Yesterday I had a fever of like 102. Fucking sucked. I know what it is. I was kidding. Your air quality doing okay? That helps. It's 100% of the fine particulate matter in this room is removed. So I think so. I think the air quality is pretty good. Not a lot of vinegar and lemon. I just don't understand what the purpose of the vinegar is. It seems arbitrary. I've tried Fisherman's Friend cough drops. I'm not a big fan. They taste like shit, first of all. I'm not overheating now. I took some ibuprofen and that lowered my temperature, Grim too. So I'm okay. Thank you for asking that. Have you tried gargling hot lettuce? No. Although I do have a cabbage, so I can make some lettuce soup later. I feel like all the menthol extracted from an Alaskan fisherman's carton of smokes. If you're overheating, you should get your coolant topped off and check your radiator. Are you going to service me, Dork? Cream of leaf. Jesus. So, what's on everyone's mind this week? I mean, I already know, but I just don't want to talk about it. Fuck yeah, dork. Um, when SQQ go up, oh no, the buffering is back. That's bullshit. Don't lie to me. My connection is perfect. When Gamma Max? Well, so for SPXW, we're getting kind of close. Gamma Max is at like 420 or 4420. For the SPX monthly, we're still very, very far away from it, which is probably a good thing, right? That means all of this is very short dated and is probably not going to persist for much longer. You're already kind of starting to see the sentiment shift, right? Because we went up too fast, and now everyone's afraid. And we got a little bit of fear on the call side into the end of the day Friday, which was shocking, frankly. I was very surprised by that. But we saw a pretty decent pullback all the way into Friday's close. Tell you there's different gamma maxes. Oh, there's a lot of different gamma maxes. Oh, I've had a few buffering moments here too. They just want me to be a minute or two behind to ruin any timing my comments may have. Perfect. Carvana to 0. How blown out did Carvana get? I didn't really pay attention, but that might be a kind of an interesting play. Ooh, and they beat. I don't know. There's still a lot of short covering going on, but the end of the day doesn't look so great. Yeah, that may have more room to run across T2. I'd be at least a little patient. I'm assuming that you wanna short it. With Zon completing their acquisition of Danbury and the announcement of a merger with Pioneer, combined with constant $4 billion buybacks each quarter, is the current price at 107 a good entry point? Okay, so yes and no. I mean, so conflict in the Middle East is going to mean crude prices are kind of all over the place. As tensions ease, they'll drop really rapidly. Um, if anything escalates, they'll pick up. It's probably not the best time to get in, but I feel like having some exposure to ZOM is never really bad as long as you can time your entry kind of alongside a drop in crude. That way, at least you don't have the crude premium like priced in. So right now, I mean, like crude futures are at 80. They're almost back under being like additive inflationary pressure. This could be an opportunity. Valuation wise, I mean, they should probably be trading at a greater multiple. But, you know, energy's just not been doing that for some time. Not unless there's a direct threat to global commodities. In which case, then they'll pick up a lot more, or at least a higher multiple. Is there any useful information on what was going on with Fubo on Friday? Well, Fubo had a bunch of covering on Friday. Not a lot of price improvement. We managed to close below $3, which leaves, well, at $3, which still leaves the $3 strike technically out of the money. So obviously, if we see continued pressure on Russell going into Monday, and Russell's lagging the other indexes a bit and kind of squeezing off that short interest, I would say that we have plenty more room to continue to realize liquidity, and the momentum is quite strong. So, the last few runs have kind of capped out right around here. So yeah, still a bit of room to run. And if you look at that relatively to like the prior prior periods, um, like our last test of 390, we may be able to run to like $4. There's no Greek neutrals here, right? Because the price is so cheap. But we may start to get some over the beginning of this week as the price moves up and there's more options on the chain that have value. I tried to hedge with a short December put, but I'm still 50% underwater. You could if you want. What are you thinking about rolling them out to? Like Fab or March? The December put's too far. And you probably sold it way out of the money, I imagine. So hedging those is a bit tricky. You're better off just cutting them. So your better bet would have been to take profits. But you really need to like either hedge those with calls or close them. Because I mean, if you sell some shitty out of the money put against them, you're offsetting your theta decay a little bit, but you're really not going to get very much premium unless your account's big enough to sustain like really wide spreads. So I mean, if you can sell, like I had a few that I left open, but I was selling like 4,200 puts against them, right? Well, that's the thing about the like current macro environment is that it's very likely that we see like a pretty wide drop in valuations, right? As margins contract, which they are doing, but slowly. That'll accelerate the more credit tightens and the more companies are affected by that credit tightening. But yeah, it kind of makes it tricky to find anything that has good value. There's some things. I find that utilities are still a little underpriced. There's some good deals to be had on the energy side of things. Um, shipping. Shipping's been kind of sliding a lot over the last like 3 months. I don't know if that's bottomed yet, but it's way the fuck down. And if anything's telling you that there's a massive contraction coming in the economy, it's the fact that revenues in the shipping and transportation sectors are falling off a cliff. Yeah, I know Maersk just laid off 10%. I still plan on buying quite a lot more of that. So the shares I have were just my initial entry, but I have some price targets lined up for that to get a lot cheaper. I just wanted to make sure that I had like a good solid position to DCA from. But I'm probably going to double or triple that total position before 2025. You mean how that Citizens Bank failed because of trucking loans? Oh, okay, yeah, the little bank that failed over the weekend in Idaho or whatever. Where do you see NVIDIA and Tesla going with indices going up? Seems NVIDIA got the short calls blown up, but Tesla stabilized at end of day. Yeah, I mean, NVIDIA still has earnings, so the speculation's a little stronger there. Tesla stabilized, but it's still stabilized above that positive charm flip point, right? Usually, the beginning of the week, you'll see a lot of short call selling on any of the mega caps, right? Like, you'll see a lot of short call selling. You'll see those start to get pulled back towards the end of the week as people start to go long zero DTEs. And so, like, the beginning of the week performance tends to be a little shittier than it is towards the end of the week. Like, if you notice, most of Tesla's gains were like Wednesday, Thursday, Friday of last week to the upside. That's pretty common across most of the mega caps. What's the difference between A, B, and Y? Just different classes of shares. You can buy them directly on the Dutch exchange. Is it Dutch or Danish, whatever fucking exchange. Copenhagen exchange, I think. Yeah, Danish. But it's like $13,000 a share. It's fucking ridiculous. Yeah, no problem. Although there might be benefits to that if you live in Europe. What do you mean, what? Middle Western consumer sentiment rap? I mean, I will say right now though that like 3 and 6 month treasuries are great, right? I mean, you get a nice yield, you get to stay pretty liquid. Don't hate those. Would you start to DCA into AMKBY now or wait for lower prices? I think my next price target, I have to double check, but I think I have one that's at like 5 something. Yeah, I have one that's at like 595, and then I have another buy order at 440. But yeah, I mean, I started DCing here in case it started to pick up some accumulation, right? It may not drop much lower than this. It could, but I have a feeling that the layoffs will really help. And like their margins have already like nosedived, right? I don't think they're going to get significantly worse. It's down like 35% year to date now. So I think it's starting to be a pretty good opportunity. Obviously, Maersk isn't going anywhere, right? And as the kind of bullwhip snaps back, and manufacturing starts to pick back up again, which it's still declining. Um, big shipping companies like Maersk are going to be a big beneficiary of the supply lines opening back up, right? Especially China. China's a big one. But I have a pretty long holding period on it. I'm probably willing to wait like 5 to 10 years. I needed to stuff money into something, and it seemed pretty viable. It's DKK, not USD. Jesus. Oh, is it? Is that why it's so fucking expensive? I thought this was supposed to transfer those. That's still ridiculous. Oh, that's weird. Yeah, usually on foreign exchanges it'll convert this to dollars. That's still like $1,400 a share though, right? Something like that. I don't know what the currency rate is right now. That's not fucking cheap. The dividend varies. It's not always 30%. But there's a few brokers you could buy it there. 1450. Yeah, it's close. What's Maersk okay as opposed to other shipping? You've been pretty clear on your feelings about the industry before. They have a lot of like government ownership, and they pretty much own like most, if not all, of their standing fleet, which is pretty good from a debt perspective. I haven't really written any DD about them, but I could. I have some notes. I'll throw them up if people are really that interested. Dry bulk shipping. It's a fucking ETF. It's quite a bit different. You've got an expense ratio, probably pretty high for that industry. I don't know what it is on that, but does that even have a does the dry bulk shipping ETF even have a dividend? Got any good cardboard stocks to short? No, but I could probably find some. Why? No, no options. Thanks, NW. Something sweet for when I'm 40. But there's a dividend. I mean, they pay out a yearly yield based on their cash flows, which I hope have bottomed out. What do you think about TLTW, or when rates go down? Would the div not keep up with TLT's growth? Um, no, they'd probably benefit. Like the dividends would probably benefit from increased prices. Also, their assets under management would go up, right? Is that the TLT covered call ETF? You know, you could just do that shit yourself and make way more money, right? Thanks, NW. I've been hoping for some long-term safe plays and pickles picks. I'm not. I mean, I don't really invest in a lot of super long-term stuff. It's not really my deal. I have a few things that I'm gonna hold for a while, like Halliburton. I'm probably gonna be in for like 5 more years or so. But generally speaking, most of my time horizons are like a year or two at most. I'm aware I can't write cover calls. Why? Are you in some shitty country? Is it a shitty country thing? It could be okay in that case. His name's Greg. So Canada, they can write you can write cover calls off TFSA. You just can't sell puts, which is fucking stupid, but how long term are your uranium plays? I'm thinking like probably 2 to 3 more years. But with all the conflict right now, that could change really quick, right? Iran's a huge uranium producer. Yes, Canada, although it's a combo of that and my broker. Well, first of all, get a better broker, right? I mean, that's super easy to resolve. Uh, who's the other one that in Canada that allows covered call selling that you guys fucking use? Uh, because of the sea or something like that. That whole geode thing is fucking nonsense. There's a million vol sellers. None of the dude's just taking like screenshots out of their like their investment like sales brochures. Quest Trade, that's the one. Quest Trade allows it, right? You can write cover calls in an RRSP TFSA. Yeah, there you go. Do you have any expected yearly gain percent requirement for stocks you hold over a year? It depends on their volatility. I mean, I prefer to see growth on track with my expectations, but that's going to vary from stock to stock, right? Like Fubo's been on track, so I'm pretty happy with that one. GME has not, and the volatility is declining, right? So the total yield on covered calls is diminishing, and I'm running out of like buy side liquidity on the options chain to sell covered calls into, which is a big problem. What are your thoughts on the Canadian housing market? That's not a real thing. I don't care about it at all. You guys are all fucked. You have like 50-year mortgages and variable rates, and your central bank is still probably raising. It'll probably come down really hard when probably in line with the U.S. market. But stop trying to make Canada a thing. I mean, it's just not a very even at the current costs, which are astronomical. It's just not a very big real estate market, right? It's just gonna mostly follow like your central bank mostly follows the Fed. So you're pretty much just going to be in line with the US, except with shittier currency and less transparent lending practices. Well, you can't open IBKR, but maybe Questrade or CIBC Investor Edge. those are some things to think about. We're gonna, me and JFresh and Dork and everyone will go over SPX afterwards. So we'll use this time to look at other stuff. So yeah, I noted Fubo's seeing a little bit of covering. I expect it could still go up, especially if we get that next like leg of the upside squeeze as CTAs and MMs move towards positive convexity on ES. So that's something we'll keep an eye on. Siri's been running a little bit. I really don't know if that's going anywhere, but it has been moving up. I know the ex-dividend date is on Monday. So it looks like the current shorts are paying that out because obviously not too many have gotten out. And still really no deal in sight for the merger of the equity there. So we may see that continue to move up. We may see short interest reignite after the dividends paid out. Upstart's moving. It's almost crossed over. Those crossovers tend to lead to a pretty decent amount of price improvement, at least they have in the past. The Fed pricing down, or Fed fund futures pricing down a rate cut by July next year may drive some interest, at least till like the December Fed meeting when we get the new dot plot, and so that may be some of the effect of what we're seeing here. But I don't think it's all of it. I think mostly we're getting a lot of liquidity tied up on the massive upside pump, and they're just having difficulty maintaining the short. Right now, there's still about $12 of upside before it hits Gamma Max, and in the past, Upstart hasn't ever had a problem exceeding Gamma Max because of how illiquid it gets when vol shorts squeeze off. GME, I guess we could cover it a little bit. So this week, over the next like 4 days, we're still in the ETF FTD period. I did not get a chance to check if XRT is still on Reg Show. Let me look. Yep, it still is. So XRT is still on Reg Show. That means that if there is any kind of covering, it'll be like 1 day. Although without earnings anytime soon, I don't think we're gonna see a lot until OPEX. So GME may be headed for more of like a traditional OPEX period in November. But right now, still being shorted. So we'll just wait and see and keep an eye on the borrow rate, right? You could get exposure now in case there's like a blow off of that ETF liquidity. But I would say that most of the R1K isn't really moving a lot the same way as small caps are. And that may kind of leave Jamie in the dust. Where can I see CTA positions? Make some friends and get some desk reports. You can look at commitment of traders, like the COT report every week, but that's only going to give you like a snapshot. Why would shorts cover when they can double down and get declared too big to fail and get bailed out? No hedge fund wants to be declared too big to fail and have to meet the regulatory requirements that big banks do. That'd be a fucking nightmare, and it would ruin their business models. So probably none of them. That's not like a win. Getting declared too big to fail sucks. You want to be just big enough that you can fail. That way you can take more risk. So yeah, not exactly a winning position. Ooh, kind of like that reversal. All right, let me see if Dork and JFresh are. Hey, Dork. Yep, he's not
What's up,
here.
dude?
Yeah, what's
Sorry, I
up,
was
man?
my system of a down.
Ooh, JFresh is sending me fancy charts.
Is he?
Yeah.
That's cool. I don't have a ton of charts this time around. I mean, I guess I do. Um, I have some decent charts to kind of point out a few little things, but
So feel bad. I'm sick as fuck, so we can wrap this up as quickly as everyone wants.
yeah, I gotcha. So that one's kind of interesting. Don't really have any economic data. I haven't done my usual uh tinfoil madness on economic data.
There hasn't been a lot this weekend in your defense.
Yeah,
I have, and there's just not a lot to say right now, right? Like I think Monday's really gonna boil down to if we hit the CTA trigger and we squeeze up a little higher, or we like miss it in the pre-market and start dropping. I mean the bulls of, and I know like JFresh's charts kind of point out that the bulls have already they've already started retreating, and they're pretty much moving their risk down to like the 4,000 level, which means this like upside probably shouldn't last much longer. Or we'll start to see more like at the money de-risking going on. I mean, like the squeeze is kind of squoze though, right?
yeah. It seems like this time around the call sellers have really been reticent to call sell into this uptrend, you know?
Yeah, yeah. Well, they had started to, and then they got blown out after the Fed meeting. But since then, yeah, they're not really aggressively selling those calls, which is, you know, bearish because then the bulls don't have any upside liquidity.
Yeah, exactly. I think it's just another one of those things where that extra little oomph is sort of lacking that was there before. I haven't really looked much at like the underlying stuff of the SPX to see what's going on there, but I would imagine anybody selling calls on their underlying position probably are in the same boat where they don't really want to just have their calls, their short calls blown out. Although they might, you never know. I mean, people who want to actually just sell their stock might just sell the covered calls and be happy getting assigned. But
That's
if they're
true.
just getting
Yeah,
naked calls, yeah. But even so, that would only provide like a little boost up until OPEX, and then it would come right back down.
yeah.
So yeah, I mean, the move up last week was pretty fucking wild. We blasted through a bunch of neutrals, which was interesting.
Yep.
Like very little resistance, which yeah, that was I found that I think it's just because it caught everybody off guard.
I think it
So
just squeezed. I think it just squeezed all of the like longer dated put positioning out, right?
right
Like
before
they
it could
were
get
just,
hedged off or
yeah,
anything.
they were just like gonna take profits, and that was it. So
Yeah, yeah. I think there was an intent to sort of push out of that range before bears could really get into a very strong repositioning point, right?
yeah,
Although now with vol as low as it is, I mean, bears are they kind of have the upper hand again. I mean,
they're already piling back in.
yeah, I mean, over those few days they basically just made vol free, right?
Yeah,
Like
Yeah, like Friday it almost was. Yeah.
We're at the same level of VIX that we were 3% ago.
Yep.
So, I mean, I don't know. I just don't know how much push you can get from like collapsing the spreads on the options chain, like at this point, because it seems like we're just going to get a lower high unless they can get VIX down to like what, like fucking
13.
15 or something, like
No,
12.
it is at, I think it is at 15. Yeah, they'd have to get it down to like 13 or 12 to get a higher high than the prior. I guess they have some beneficial flows with share buybacks. And if CTAs go like long convexity, they can de-risk forever, right? Because they'll have that liquidity support on the downside.
Right. They can
Or well,
de-risk
not
the downside
forever, but they
immediately.
can de-risk until something changes.
Yeah, yeah, yeah.
But yeah, I do think they've kind of run out of gas to the upside. There might be just a little bit left in the tank, and that might get us to like maybe gamma neutral. But after that, that might be about it, huh?
Oh, there's another chart too that we could talk about. So I got a couple charts if you want to
All right, I'll pop
if
them
we want
up.
to talk about. We could do the spread one first,
Okay.
since that one is somewhat interesting. It's actually quite interesting. Um, yeah, the pictures are after I threatened to uh, cover Jay Fresh's car in hentai graphics.
Ooh, nice.
I still
I got them open.
okay, cool. So the spread guy, the AAA triple B spread remained elevated. And that was, heading into Friday. We don't have Friday's print yet, but that was like on Thursday. Stayed elevated, but then the high yield AAA spread uh, dropped down by how many basis points? 47 basis points in a single day, right? And I remember on Friday you were talking about, how covering happens quickly,
Yep.
and that drop in the spread was very indicative of somebody covering some kind of a short position on high yield bonds.
Yeah. Which you kind of see here, right?
Yeah, yeah, yeah. It's funny because and this is the whole idea of the bottom up sort of thing I've been talking about, where like in terms of quality, bond markets tend to destabilize from the bottom up,
Yep.
and the fact that we're seeing high yield spreads do this without AAA, triple B doing it tells you that it's not necessarily risk on. It's sort of like a risk off in a way. So I just found that interesting. Still watching these things, kind of just seeing how they develop relative to other points in time. We are at a pretty elevated point for both of these guys. I mean, like even that drop in the grand scheme of things didn't really get us like to like a low spread on high yield.
Yeah.
Uh, and our weekly trend for AAA, triple B is still going up. So yeah, this is it's there's some stuff happening, and this may all be related to the dollar, right? But the fact that AAA, triple B didn't really collapse at all. I mean, they both dropped by a basis point on Thursday. It's just interesting. So I'm gonna keep watching this, right? And if we see high yield spreads pick back up again, then that kind of tells us that the covering in the bond market is over, right? We'll also obviously treasury yields start to stabilize, if not kind of start creeping back up again.
Yeah.
Which the drop in yields fucking insane too. Something worth mentioning, that yields fucking nosedived over the last 3 days. That was fun.
Yep.
Like everything nosedived, like
These
except for the 1 month. Like even the 3 month dropped. Like
these are
what did
this
it
is the
drop? Eight
well,
basis points.
I mostly just watched the 10, 20, 30, but
Yeah, it was interesting to see even short term yields drop like that though.
yeah, the 2 year actually got fucking hammered. Hold on, I can pull that up here. Yeah, the 2 year got fucking hit really hard too.
Yeah, so this was like, pretty crazy stuff. Ooh, I can make another chart too, actually. I'll
Well,
see
while
what
you're
this
doing
looks like.
that, I can kind of talk about so correlation has pulled back really hard, and despite our price only being like 86 BPS off of October's high, correlation is still quite far from October's low. So we're definitely still in a overall like higher volatility regime. If we look at like correlation from like October 12th to now, it's still up like 30% from the low. Um, despite the price being almost as high, right? And so their ability to short vol against long vol interest is still contested. Um, and the cheaper they make vol right now, the more incentive they're adding to people going long volatility, right? And then something else I wanted to talk about is if we look at the Japanese carry trade since the YCC decision, it has started to pull back very, very fast. It's down 63% since the YCC decision. I would say that people covering vol short like bond shorts right now are probably not probably not doing it because they think that the yield curve is done, but they're probably doing it because they want to get out before the carry trade begins to pressure the credit spreads. And
Yeah, I think
on
you're
this
right.
pump, they were able to kind of keep JPY near 150, under 150, and keep the dollar down. But as soon as they stop covering short positions on UST, dollar is gonna rocket again. There's nothing holding it back.
Yeah. And the interesting thing about this carry trade, right, is that, it doesn't really destabilize until it does. So like what we're watching is like this big, slow, lumbering beast kind of just move like like when you watch a giant move in a movie, how it looks like it's moving so slowly. It's kind of like what we're watching here,
Yeah.
and it hasn't stepped on the Lego yet, so we're kind of, you know, watching it move around, but it is moving, and it's got a ton of inertia. So even with the Japanese 10-year being unpinned, um, it could take a while for things like these currency pair spreads to really sort of break down. Like they can just very slowly keep getting worse and worse and worse until something happens, right? Where Japan makes a policy change or the United States makes a policy change, like the economy takes a dump and Powell's got to cut rates.
Well, don't forget that the short coverings closing the spread from the other side.
Yeah, yeah.
Yeah.
So that yeah, it's there's things happening, but by and large it'll move slow and just kind of go in a direction.
Mm-mm.
Uh,
Okay, so no, yes and no. It can move slow, but it can also move all at once.
right, right. Yeah, that's
Yeah,
the giant stepping on the Lego.
yeah. It can move. Actually, it can move quite fast. And if we kind of look at it, you know, this last week we almost hit the high from like 2007 on the like carry trade like swap, like the synthetic swap that we saw before Bernanke started lowering rates. Um, and there wasn't a lot of time between that and when the market crashed. I mean, that was in like May of '07. And the market had pretty much started crashing by like end of '08. Except this time, this has been leveraged up much, much faster, right? That was a carry trade that was built up from like the .com bubble all the way through '07. And the current one, has been largely levered up since like last October.
Yeah, that's and yeah, even the currency pair. spread is, back to 2008 levels and continuing to widen. It's not quite like as terrible as it was back then, but it's happening.
Yeah.
So it's definitely something to keep an eye on as this widens more and more, right? You kind of get a what happens is anything that you need to get dollar denominated as someone in Japan gets more and more expensive.
Well, also as
So
this
that
breaks down assets purchased, or money lent during this period, those assets are going to devalue. So as the carry trade breaks down and it becomes worth less over time, and that depends on the speed at which it breaks down, right? Which
yeah,
the initial move over this last week has been very fast. That may not last, but if it does break down very quickly, the assets that back this, those hold to maturity and mark to market securities and MBS and CMBS, they'll start marking those to market, and that will lower the overall value of those securities in the broader financial system. And
right.
that's the effect that actually paired this with the '08 crash, was that so many securities had to be marked to market in order to continue maintaining the hedge on the trade, that those securities broadly became significantly devalued, and that blew up Bear Stearns and Solomon, because they became insolvent due to the lack of value in their security, like mature securities portfolios. So the speed at which this breaks down, and that's something we are going to watch really carefully. That's going to tell us a lot about how quickly all of this could be realized. If this is breaking down at 60% a week, we're not going to get an entire year before it blows up.
Yeah, and so to kind of break it down further too, like why you have to sort of, take these haircuts when this carry trade breaks down is you're borrowing yen, right? So you got to pay it off in yen, right? But you have dollars as your collateral, right? So or as your, what you're using for your liquidity is dollars. So there's this, when you're making payments on the loan, you have to be converting them from dollars to yen to do it. So if the yen gains value, now you have to use more dollars to pay off your yen loan, right? And that's sort of where these haircuts come from, and the reduction in your dollar collateral because your cash flow has taken a hit, right? Your forward cash flow. So and that's the hedge. That's where like you get these big haircuts as your hedge, starts to shift in an outsized way because it's a leveraged position.
Yeah.
So just to kind of spell out sort of why the change in the value of the yen, or the change in the value of the yen affects carry trades that are currently open. Change in the interest rate of the JGB or UST affects carry trades open from then on,
Yeah.
right? So it's kind of like there's the backside and the front side, right? You have your exchange rate risk on the backside, and then you have
Well,
your spread.
you also have the effect of like coupon on collateralized US treasuries with Japanese banks
Yeah,
as well.
and as interest rates go up on the Japanese banks, right, the value of like the face value of those short Japanese bonds goes down, right? So there's a lot of interesting dynamics that start to happen and affect the overall hedge, and that's kind of why Girk likes to look at the swap pricing. I like to look at the currency spread. I'm looking more at like kind of like the quote unquote hold to maturity carry trade, and Girk's looking at sort of
I mean, we're both
uh,
looking at the currency spread, right?
in a way, yeah,
Yeah,
yeah.
I mean, it's really a similar thing we're looking at.
Yeah, it's just mine has a focus on like tail risk, and yours has a focus on I would say more of a like a dollar collateral risk.
Yeah.
So it's just, there's some, it's
The
small.
well, the reason I'm choosing that over the pair trade is because I don't think the money's flowing the other way. So I think the
Yeah.
spread is a little less important than the dollar collateral, but I mean, it doesn't matter. You guys can look at it either way. It's mostly going to give you the same information
Yeah.
as
Yeah,
long
no,
as
pretty
you
much.
as long as you understand the lens with which you're looking at it. Something else I wanted to note is that bond vol kind of fell flat on Friday. Um, and that's usually not a sign that bond volatility is going to continue going down. Usually, when much like VIX, when volatility falls off, it falls off pretty quickly. But seeing move kind of flatten out Friday. So Friday had a big move down in bonds, and then they bounced back really hard towards the end of the day when we started to see that call side profit taking. And this and that kind of puts us really close to those hitting or missing on that CTA trigger, and we'll find out. We'll know more tonight, but if that sell off from the end of day Friday continues, and there should be a little bit because of the collapse of charm on short dated options into the end of last week, especially on the call side, there's a good possibility that we don't hit the CTA trigger. And if we don't hit the CTA trigger, this could start to break down pretty quickly without some significant vol selling to provide liquidity.
Yeah. Okay. So Gork.
Yeah,
So the 2-line yield curve that I posted, it's like the first one I posted.
got it.
That's something we should talk about too,
I got,
right? So
I,
the yield curve took a big step backwards during all this as well, in terms of the bear steepener that we've been watching.
yep,
So the bear steepener unbear steepened. So the red line is Friday,
yep,
and the blue line is Wednesday, right? So over 2 days, we saw the yield curve steepen significantly, right?
yeah,
So this is pretty weird, and it sort of puts a dent in the narrative of a soft landing, right? Because you're seeing a lot of the maturities further out, like 2 years and out, all sustained a significant drop. So the bond market, I mean, even though it may be just covering, but putting all those notions aside, the bond market is signaling that within, a fairly short amount of time, the Fed's target range is going to have to drop by at least 50 basis points. Just something worth mentioning, because we've been talking about the bear steepener. We've been watching the evolution of it, and
yeah,
then the second chart, if you want to share it, is just the yield curve. And I get these yield curves from, I literally just go to U.S. Treasury yieldcurve.com and I put in dates and I pin them. So you can go and have fun doing this yourself. Um, but the second one just kind of shows the evolution of the yield curve, and you can actually see on the second one, the blue line is our most recent yield curve, and the red line is the yield curve from a month ago. And so you could see that bear steepener, like how big of a step backwards it was, and where the short term yields ended up, right?
yeah.
And how you can kind of come to the conclusion that there's an expectation from the bond market of a lower target range for the Fed, but higher for longer is still priced in, right?
It's sort of right. They started moving up those rate cuts. They moved from I think like the first cut in July now to June. Um, I think the story's going to change a lot when the next dot plot comes out, but for now, I mean they're going to believe what they're going to believe, right?
Yeah, it's true. It's just it's interesting. Oh, Jayfresh can't join us today.
Oh no.
I
Does
know.
he?
I think he's trying to hold up the facade that you and him are feuding.
Oh, okay.
So yeah, no, yeah, Girk and Jay Fresh are still so mad at each other, guys.
Oh
It's so
yeah,
great.
so
Tune in
angry.
to find out. You should really subscribe to Dillionaire
Yeah, you don't
to
want
get
to you don't want to miss
news.
out on any of the hot drama.
uh, yeah. So
JFresh predicts wild chop between 4,300 and 4,400 all week.
that would be exciting.
I'm kind of into it.
I'm super into it as long as it all happens intraday.
I guess we could talk about last week's predictions and how they all broke down at the Fed meeting, and JPOW being a big cuck. But
Oh,
basically, yeah,
dude,
that's
dude.
all three of us basically projected that this would go down after the Fed meeting, that he would stay strong with his his hawkish stance, and he tried briefly, but then just said a bunch of nonsense. So the market squeezed. The market, honestly may have squeezed regardless of what JPOW said at that point. Once we broke that 4,200 level this week, it was on like Donkey Kong. There was probably nothing JPOW could have said to have stopped it from continuing to squeeze up, but there was a small chance that he could have.
Without raising rates at that meeting, there was no way he was going to get the market to go down after what Yellen did.
Yeah, yeah,
There was
that's
no
true.
way because Yellen basically just, she completely copped out of selling the duration that she was recommended to sell by the big banks. And basically, you know what? I'm going to throw you guys the softest softball underhand toss you've ever seen in your entire fucking life. And have fun rating RRP to pay for short duration. And that's that. And then JPOW, because he's beholden to his board, right? Can't exactly just go in there and say we need to raise rates, right? So he was kind of stuck, because you don't want to raise rates because they're too scared to tip the economy into a recession because the meatballs on the cannoli for the economy.
Well, because
So
I mean, think I'm trying to think about it from their point of view, and the longer they can keep quote unquote recession off the table, the more flexibility they have in their monetary policy. Like once a recession is like locked in, and even though we've technically already kind of had one and may already be in one because the data's bullshit.
we're not in a management recession.
Yeah, management's providing all the productivity, so that's super awesome.
Dude, they're managing
Guys,
GDP up.
support your local mid-level management. They're the people ensuring the security of your job.
God damn, I wish Jay Fresh could come on because I would love to have him rant about this because his rant on it was amazing.
And me and him went into quite a long diatribe about it the other night too.
Well, you want to talk about it because I mean, like it's I don't think it's necessarily been brought up on a Sunday stream yet.
We
This whole thing with this data
we could, so like a
because
few a few a few days ago, me and Jay Fresh went into we're kind of digging into how they're calculating productivity, and they're kind of basing all the productivity off a period in time when no one was producing anything. And so let me think of the best way to put this without getting too into the weeds. Our base effect for productivity is nothing. Um, and so against the backdrop of nothing, all productivity looks amazing. I think that's the easiest way to put it.
yeah, um, well, I was just hearing about the weighting of because it was like the GDP print was nuts, right? And I'm pretty sure Jay Fresh was on a conquest to figure out whether or not the GDP print was because of productivity or because of inflation.
Yeah.
And then, yeah, what he found was that, like, yeah, the weighting of managers to productivity was like, what was it? It was something insane. I forget what it was, like 50% or something.
It's
But in
huge,
any
yeah.
case, yeah, there's just like a crazy outsized, um, weighting of managers to productivity, right? So it makes the GDP look like it's all productivity and not inflation.
Yep.
When in reality, what's been happening potentially is that the size of middle management in the US is just ballooning.
No, no, it is. It's this. I mean, you can look at the figures from the latest report, and yeah, it fucking absolutely is. Like labor productivity growth is down, right? But like management productivity and like total factor productivity are way up, right? And that's where they like weigh um that's how they weigh management productivity is with total, like they used to use a different metric for it and then they changed it in 2021 to one that's like slightly less accurate um and ultimately like weighs managerial input on output more heavily. But I'll quote JFresh on this. Real GDP requires accurate PCE data. Accurate PCE data requires the prices and amount of goods and services purchased from the CPI data. The CPI data pulls from consumer expense surveys and trade organization data. Critical component is the weightings for each item that comes from the CPI data. It's calculated annually and on a 2-year delay. So the weights for 2023 are from 2021. What were we doing in 2021? Sitting at home consuming goods and not consuming services. What are we doing now? Consuming services and reducing consumption of goods.
Boom.
Yeah.
And also, to point out like the forward tail risk to this sort of weighting and this ballooning of management is, as he described it, the U curve, right, of management to productivity, right? So, when you don't have any managers, you're not really productive because nobody's directing anybody to do anything. You get a few managers, things get more productive, right? So you get the right amount of managers, and then everything is optimal productivity. But then you start adding in more managers, and now you have managers managing managers and having meetings to schedule meetings for meetings, right? And the productivity starts to go back down again when you have too many managers, and we may just potentially maybe on the other side of that U curve where we have just too many managers managing and not enough laborers laboring. So,
Yep.
ooh, you got a chart up.
Yeah, I got a few from JFresh. I assume he's busy, so I'm gonna share this stuff on his behalf. So we see calls rolling from so we have last week and current week. You see the blue. Hold on, let me change my. See the blue and the orange. So you see calls rolled in from 4,200 to 4,400. Looks like mostly above that calls were closing. And a lot of spreads, like big call spread from 44.10 through 44.25. And then let me go to the next image. Here we got longer term trends. Puts are falling off pretty rapidly, and that kind of lines up with our squeeze. In the earlier, well, the mid to late part of the week, right? And then also with well, yeah, it mostly lines up with our squeeze, right? We saw a big. You can see that on the bottom chart better. There we go. So you see the big dump in put OI, and this is, I believe, VIX inversed, right? So alongside the big dump in VIX. So I think a lot of the downside of VIX, and this is something me and Jay Fresh were kind of like arguing back and forth about a lot earlier in the early part of the week. Although I think we were actually on the same page all along, but most of the decline in VIX caused not by short puts, although some of it was, but by long puts buying to close. So buy to close long versus sell to open short, right? And in the latter half of the week, like especially Thursday and Friday, I think we saw more sell to open short in order to sustain that upside liquidity. But I think in the early part of the week, a lot of our price action was and drop in VIX were propagated by buy to close on the long puts. And then yeah, you said this also supports the de-risking of sold puts for the SPX chain. Puts added pretty much across the board, and so let me pull. Do I have this one pulled up? Here we go. Right, and so we're starting, especially here at the, you can see the 4100 strike. They've packed just a massive amount of their put interest into the 4100 strike. So the bulls are still retreating on those short vol positions. And then lastly, HV10 is at 20.3. So our average daily move is 1.3%. And then do you want to add anything to that? Or you want me to go back to any of these charts? You want to talk about anything?
Well, the HV10 being above VIX, right?
Way above VIX.
Yeah, yeah. So this is interesting, right? Because if historical volatility remains as high as it is, while VIX remains as low as it is, right? You're going to have a greatly diminished effect from shorting VIX than you would with HV being lower, right? So
Yeah.
even if this goes up violently and it continues to go up violently, historical volatility is only going to rise, right? And it's at that point it becomes not so good to be able to sustain this upside action, right? They need a period of stagnation and calm in order to regain the leverage ratio. I guess, yeah, like the leverability of short vol. So um, and JFresh was sort of hinting at this the other day, where they 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 don't want as much ups as they've been getting because it's raising historical volatility faster than it's dropping VIX.
Yeah. And
So
I think
that's something.
there's another period of time where we kind of faced that same scenario. And that was back, let me try to show people. That was back here, coming out of March. We bounced so hard out of the bottom in March, and VIX dropped so rapidly. We ended up doing like nothing from like April through May. Like this whole period, and until like variance had dropped enough and historical volatility was more in line and they could leverage short vol again to push another upside.
Right, and yeah, right when FRC failed is
Yeah.
when they think they started pumping. Yeah.
And then with this and our current macro conditions, this may just reverse really really hard, right? Like they may not be able to create a, because vol's free, right? And if anything bearish happens or bears simply want to come in, they can just buy puts. They're cheap as fuck. Um
Yeah.
and so bears are really really heavily incentivized to leverage that downside, whereas they weren't so much. And like HV was a lot closer to VIX back in like April and May.
Yeah, it's not even just bears too. It's people looking for a hedge on their position, right?
Yeah.
So, anybody with big index fund exposure, or like you'd say a really high, or like a really close to one beta, or any beta value that they hedge off, right? They're going to hedge their beta with SPX puts. And when the risk value premium is as high as it is, you want to carry some kind of a hedge like that.
All right. So do we want to talk about our projections?
Yeah, we can talk about our projections. I mean, it sounds like JFresh just needs a wizard sleeve between, what do you say, 4,300 and 4,400.
Yeah, he's a violent chop between the two. I'm gonna do his now. I don't know which way he wants to go with it, but I'll just assume. I'll end his week in the middle.
There we go.
Yeah, all right.
That'll work.
He can revise that later if he wants to.
Yeah, for sure.
You want me to go?
Uh, I don't know. I can go.
All right. What do you
Um, so, man, I want to be bearish.
got?
I'll let you be bullish. I'll be bearish.
I don't want to be bullish.
Fine, I'll be bullish then. Okay, so let me think about how I want to do this. So break GN on the first day,
Okay.
and then so like break it by like, I don't know, 20 basis points or something. So like, what is that, like 42.10 or something like that?
44.10.
Yeah, sorry, 44.10. Yeah, so something like that. Then flat the next day, and then retest gamma neutral intraday the next day. That'll be Wednesday, right?
Yeah.
So yeah, retest gamma neutral intraday Wednesday, bounce, and close at 44.75.
Ooh.
And then from there, just up until or no, well, I think we just trade flat from here to the end of the week at that point if we do that,
All
because
right.
I don't think there's much liquidity left.
So does that look good? All right.
Yeah, yeah, I like it.
All right. So
We're right at gamma neutral, so I just figure, you know what?
I think tomorrow down to like DN. Then I think we bounce back to GM, into Tuesday. Kind of flat Wednesday. I'm not looking at the economic data at all, but is there anything big this week?
I don't think so. I don't even think it really matters. Let me see. What do we got this week? Um, we got a bunch of Fed speeches, exports, imports, Red Book, nothing like that crazy. Chair Pow does some talking on Wednesday. Bill auctions on Thursday. 15 or no, 4 week and 8 week, and then continuing claims on Thursday. Mortgage rate. Chair Pow talks again on Thursday.
Oh, really?
Yeah. Great Britain GDP month over month on Friday, and consumer sentiment preliminary on Friday morning, or I guess, yeah, 11 a.m. Friday. So that's something. But yeah, just a bunch of Fed speakers doing a bunch of Fed speak.
All right. Well, that changed my mind. So I mean, we're all pretty close to each other, though. I think your failure point here might be that you're going a bit above GM towards the end of
Am
the
I?
week. Yeah.
Let's just put it at GM then.
Okay. Yeah, that's probably more accurate.
Yeah, I was just picking a number that was a big number because we're already at GN, so I figure we're gonna break it and then move up as much as we feasibly can before we just run out of spunk.
All right, there we go. We're all kind of in the same place. Just get like 20 more predictions and we'll have a Monte Carlo.
Jesus Christ! You know what? I should have been bearish. I didn't know you were gonna be not that bearish.
I mean, I'm
Got to
not
do the
that I'm not that bullish either. I just think that they're gonna try to get that last little bit of liquidity. I just don't think they'll get it tomorrow.
Yeah. I think it all depends on the Fed speak later in the week too, in terms of where it's
Well,
gonna play out.
don't
Because
forget don't forget tonight we have Bank of Japan's meeting minutes from the meeting, and then we also have their services PMIs.
ah,
Yeah.
okay.
So and we have the loan officer survey tomorrow.
Oh, the sluice. I love it.
We're
That's
gonna
my favorite part. The
yeah,
sluice. That's my favorite print.
that's a good one. I like it too. All right,
Well, that tells
man.
you all kinds of fun stuff. So yeah.
I'm gonna be sick as fuck for the rest of the day, and I'll have pickles picks out tonight a little bit later. Keep an eye on futures. It'll tell us a lot about how the CTAs are going to be pressured into the morning. We
Right
are
on,
we
man.
are we are
Water.
definitely but we're in a constant state of being set up for events. Middle Western Consumer Sentiment Rep.
What a name.
Consolidate Monday, Pump Tuesday. I mean, mine's kind of like consolidate down, Pump Tuesday. I don't think we consolidate flat Monday. We could, but I think there's too much pressure at that price point. We'd have to, if we're gonna consolidate, we'd have to drop a little lower. I think like 40, 43.30, 43.40, like around there, would be a much better range to consolidate in.
I timed out Bip's Solar Bear because of his name.
Yeah, that's fine. He doesn't say anything important anyway.
Well, you know what makes up for it is he just got an honorable mention on the Sunday stream. So.
That's true. Yeah, maybe we shouldn't give him so much
All
publicity.
right, man. Thanks for having me on. Drink
Hey,
drink lots of water and get some sleep.
oh well, man. Thank you for coming on. I'll see you later, dude.
Yep, later, bud.
Later. All right. So what do we got? Kruger, thank you for joining Dillionaire, man. I appreciate that. Hit me up on the Discord. I'll get you added after the stream. I know there was a couple of questions. They're working way too much and not getting paid enough. All right. Twat Waffle had some questions. Okay, there we go. Lumen and Car. Okay, I trade Car once in a while. They look great right now. Car bounced off a descending wedge after earnings. 34 million shares outstanding. 2 million share buyback. So Car is like an old OPEX crony. Yeah, it does look good. Very similar price action usually to DDS within its channel due to its extreme low liquidity. The options chain is still gone on that, right? Or did they bring it back? I don't know. But yeah, I mean, car can move pretty hard. Uh, but obviously, very cyclical volatility shorting there. And then Lumen, yeah, a lot of people fucking love this one, but I'm not such a big fan of of their current debt. They sold 1 million stock, historic sell off. CEO scooped up 1 million shares. Hmm. The fucking liabilities are so tough, though, man. I don't know. They're probably priced for bankruptcy because they're headed there, right? Yeah, that debt's a bitch. I like car. Car's fun to play if you can catch the bounce, but if you don't, it's probably not worth chasing. Yeah, if you guys could drop a like. Thank you so much for tuning in. I'll have Pickles picks out tonight. If there's any questions I didn't get to, feel free to DM me. I'll probably just be laying down for a few hours, so I'll be around. Anything new on Docu? I mean, not new. I'm not really. I said this before. I'm really not interested in buying back into it right now. Maybe like middle of next year or so. I think its valuation can slide quite a bit more, despite how well their margins have been doing. There's more competition coming into the space, which has always been a threat. But I think the pace of business is going to slow dramatically over the next 12 months, and Docu's going to get hammered by that on their earnings. They make a lot of money off of a lot of transactions being done, and as the economy grinds down and the effects of policy tightening become more and more apparent, the economy is going to slow, and when it does, Docu's definitely not going to benefit from that. It's going to reduce their sales probably significantly. So yeah, I'm pretty willing to stay out. Are you still short TLT? So I'm a lot less short TLT than I was the last time this question was asked last week. I've gotten stopped out of quite a bit more, but I still have some. I still have some shorts. I'd say about 30% of my position. I have been adding a bit more to the long side, but not a ton. I still think we can see TLT drive lower as all of this, carry trade stuff and everything breaks down. And I don't think we've seen the peak rate for the 20-year yet. But yeah, I mean, not taking profits on some of that short this week would have just been silly. So thank you guys so much for tuning in. I will see you tomorrow. Have a great night and enjoy the rest of your weekend, everybody. Later.